I am, yeah.
Live, gents. Live time. I think the audio is muted for now. Okay. Awesome.
It's 11:29. I think we got one more minute before people officially jump on.
For those that are early, thanks for joining us. Pleasure to have you here.
Absolutely. People's very, very keen on this Monday morning to get into to learn about how to look after tax.
Who wouldn't want to learn about crypto tax? There's whole companies dedicated to it now.
There is, and we'll probably talk a little bit about that throughout this next hour and a bit.
Danny, as a head of tax at Koinly, this must be like a Super Bowl for you, mate. You get to talk about tax for an hour.
Exactly.
The defining moments.
Defining moment.
That's it.
When you were studying tax those many years ago, back in university with a calculator and a pencil.
Yeah.
Little did you know that you'd be about to be going live on YouTube. What do you reckon, Grant? Should we kick off soon?
How many people do we have on? Do we know how many people we have online? Numbers guy here.
Numbers guy, yeah.
We have 176 people watching.
That's awesome.
179.
Some comments coming through the chat already. Excellent.
Danny looks sharp, probably.
It's still backwards, but that's just always going to be like. Okay, yeah.
We'll just give a few minutes for everyone to join, and then we'll get kicking off and talking about some crypto tax. What are we at, Grant? Should we go?
It's up to you guys. There's some questions coming out already.
Nice.
That's good.
That's good. That's what we're here for.
Haven't even said anything yet.
People are interested.
Yeah.
Fantastic. Yeah.
Yeah.
We should go.
We can kick off.
Yeah. All right. Good to go.
Good morning, everybody. Huge thanks for joining us here on your Monday morning to talk everything tax and crypto. By way of introduction, myself, my name is Tommy Honan. I'm the head of strategic partnerships at Swyftx, and I'm joined by the, as I call them, the real subject matter experts, Adam and Danny from Crypto Tax Solution Koinly, who'll give you an insight into the potential tax implications of your investment activities across the industry. Listen, nobody gets excited or overexcited about doing their tax, but unfortunately, it's necessary in modern society, and whether we like to admit it or not, a key part of industry adoption long term, in my opinion. If you're going to talk tax on a Monday morning, the boys from Koinly have been very, very generous. Offer out there to everybody on the stream and watching this later. The first 1,000 people who use code Swyftx Live 22 for their next Koinly tax report will get it completely free. So amazing offer there from the Koinly guys, and much appreciated from you guys. Just to frame this a little bit, I guess I wanted to just touch quickly on my own personal story. When I got started back in crypto, many years ago, I guess crypto tax isn't something that comes to mind and something that, you know, you think about at the time when you're playing across different exchanges and wallets and dexes or whatever having you. So, you know, I guess I found out pretty quickly when I went to do my tax and try to get everything in order that it was quite a problem. It was a problem that many people had, including myself. So I guess my experience was, you know, I would have downloaded a CSV file off the exchange at the time, gave that to my accountant. He looked at me probably with three heads and saying, what are all these transactions about? And, you know, it ended up being a very costly exercise for me. So I guess that's, you know, fast forward to 2022, we have software like crypto software, tax software like Koinly that, you know, essentially minimize any of the need to do these transactions. So I guess, you know, from a Swyftx perspective, it's a really important issue for us. You know, Swyftx being one of the biggest crypto exchanges across ANZ, you know, most trusted for good reason and top rated in the country. You know, one of the main reasons is we try to give our customers the best experience, customer service in the market, and, you know, make it as simple as possible to use crypto. Obviously, that now includes making it as simple as possible to deal with tax. You know, so thanks again to Danny and Adam for jumping on. And yeah, let's get into it, lads.
Awesome. Well, firstly, thanks for joining us. And I will introduce myself. So my name's Adam. I'm the regional manager here for Koinly. So Koinly itself was actually started by our founder, Robin, who came up with the solution when he was doing his and went to go build a platform to make it as easy as possible. As you see, we've got offices kind of around the globe opening up, and one of our big first regional offices is here in Australia, just in George Street in Sydney. Customer service, sales team, marketing team. It's great to have like a real presence here and be able to connect with our customers so closely. I think for us, it's great to have Swyftx today and to be talking to yourself, Tommy, because when we think about exchanges and we think about our customers and what we want to provide for them, there's definitely some key synergy. I mean, Robin, our founder, myself, and all of the team at Koinly really care about providing good customer service, easy UI, and basically just putting the customer first, which is why today, even when we were coming in today, we were going to give away 500 codes for the first 500 people were to get free Koinly. And in the car, we were just like, you know what, we want to do even better. We want to give away 1,000 so that people get Koinly, able to use it and kind of take off that taxing element of tax and just make it a bit easier. So pleasure to be here today. Pleasure to have Danny here. You said that not many people get excited about crypto tax. Obviously
except for you guys. Yeah.
Yeah, obviously never spent half an hour talking to Danny about crypto tax. It's funny because we started working together, and within a few weeks, tax memes started being flown around on the Slack channel. And there's, you know, you're really into it when there's tax memes in the office.
There's no limit to the amount of tax memes we have on our Slack channel.
Nor there should be.
There should be, no. So with that, I just want to say it's a pleasure to have everyone online. Good to see the comments flying in from the corner of my eye on the screen. Feel free to have this as a session where you can ask us questions. We have a team outside that's looking at them to make sure they get fed to us, and we want to be able to provide as much of a two-way conversation as you can. But I'm looking forward to seeing what Danny's got for us today.
Thanks very much, Adam. So I'm Danny Talwar, head of tax here at Koinly, and a big part of what I do at Koinly is providing the education piece to go alongside the platform that we offer to customers. I think, Tommy, you know, when we look at Swyftx, I think what will resonate is it's not just all about having the exchange there where people can buy, sell, exchange, but also having that education piece there, particularly for a new industry and an industry that's going to just grow more and more. So today we're going to cover a little bit around crypto assets and taxation. It's going to be quite interactive. So Adam and Tommy will be jumping in where they feel they wish. So just a disclaimer. Koinly and Swyftx are not financial or taxation advisors. So what we run through today will be just for educational purposes only. Tommy, Adam, hopefully you learned something today around crypto tax. No
doubt about it.
Exactly. And you know, please do seek professional advice from a qualified accountant on this matter. And the recording will be available on YouTube once the live stream has ended.
Tommy, Danny's actually asked our marketing team if he can start getting printed on the back of his t-shirts that this doesn't constitute financial advice.
It's probably the easiest way to frame it.
Just so that when he meets people and then walks away from the conversation, they get that final disclaimer as the end of the conversation.
I think that's very much
Makes sense.
needed.
Yeah, you make it happen.
So just a bit of an overview of what we're going to cover today. So firstly, I want to cover what crypto assets actually are in the eyes of the ATO, set the landscape a little bit around crypto assets and the adoption. I also want to talk about the ATO guidance for crypto assets and where we stand today, and give a little insight on what might happen in the future as well. And we're going to then round it off with, well, how can software providers like Koinly help manage your crypto tax obligations? And we'll have a little bit of a Q&A at the end and hopefully answer some of those burning questions that we can already see come in on the live chat. So hopefully that gives everyone a chance to have their voices heard. So first and foremost, what are crypto assets in the eyes of the ATO? So, this goes without saying, but it's easy to just say cryptocurrency and not recognize the full spectrum of crypto assets that are actually out there today. And so I just wanted to acknowledge that because it's something the ATO recently updated their guidance on, where before they focused on Bitcoin as the prime example of cryptocurrency and the basis on which their guidance formed. So I think it's important just to recognize it's not just Bitcoin, Solana, Ethereum, but stable coins, asset-backed tokens like Paxos. Not sure if there's any PaxG holders amongst us, but that's a really interesting one. One token is essentially an ounce of gold. So
inflationary environment, it's very, very on trend at the moment.
Exactly. I think something that's certainly increasing at the moment. Game tokens as well. This is a big one. Lots of people playing games to earn. I think we have a few GameFi people in our office, Adam. I know that for sure.
Yep.
Personally, I'm not a gamer in the crypto space, but it's going to be really interesting to see how this space evolves, and the tax implications are really complicated in that space.
Axie's a popular one among some of our clients at Swyftx, and we also have it as part of our Earn program. So it's quite attractive yield through kind of the staking reward element back to our Earn program as well. So that's definitely one a lot of our users are interested in.
Yeah, right. And I've heard that one is a game that people genuinely do play to actually earn income from. Regardless of how good the game is, it's how they eat.
That's right.
It's definitely one of the true rocket ships that has come out of the GameFi space. What's interesting is as we get more and more people in our office, the kind of younger crowd that's coming through that are getting into working in crypto and getting into working at Koinly are all like GameFi nuts, and they're all talking about like yield farming and their gaming teams, and it's really impressive to see.
And the other one, of course, is NFTs. I mean, NFTs have just exploded in the last couple of years. There's a picture of a nice Bored Ape there. We might have
How much would that one cost you if you want to snap that one up? A couple of $100K, probably.
Yeah, maybe more. Adam might be the man to ask on this one.
Yeah, I mean, they're ranging around that at the moment, even pushing up. It's been an interesting space for them. I think for me, like non-fungible tokens, what's really exciting about NFTs isn't as much the pictures, but actually the use case of being able to sell assets through the blockchain. I mean, I saw the first house being sold in the US on Ethereum, and people seeing to build contracts for actual real-world assets that are held by crypto. And even recently, we saw a bank become a holder of those assets so that you can actually store them with a bank, which is really interesting to see. I think that was Citibank that have just started doing that now.
Yeah. So I think the takeaway here is there's so many different forms of crypto assets, and you have to pay tax on every single one of them. So just bear this in mind as we go through the rest of the slides, because it's definitely they're definitely all taxable in the eyes of the ATO.
And I just want to say on this, like what's been great about the ATOs bringing out the new framework in which they've identified these as in different assets and understanding them for what they're doing and bringing to the ecosystem themselves, because I find Uber drivers are like the barbers and the UK taxi drivers for when you're here now. They kind of give you what's up to date. And before they're all like, oh, crypto, that's like Bitcoin, right? And now the conversation's actually changing to be like, oh, they're talking about NFTs. They're talking about layer 1, layer 2. They're talking about smart chains. And it's great to kind of see that the ATO coming out with those frameworks to show that they're understanding what's happening in the space.
Yeah, and I think it's just going to be something that will evolve more and more. in the future we'll start to see hopefully some more complex guidance on DeFi, GameFi, and that kind of remains to be seen. So one of the things I think we should just cover is the crypto market is growing. I mean, adoption is really, really high, and it's not just amongst people as well, but I'll just touch on that a little bit. So ASIC actually estimate that more than 800,000 Australian taxpayers have engaged in digital assets or have held digital assets. So I think that's really significant. I think Finder estimate that 1 in 6 Australians actually now own or have owned cryptocurrency, which is really significant. I think as part of Swyftx, that's probably something that we're seeing more and more as well, Tommy.
Yeah, when I look at those figures, I wonder where they came from.
I know
because I know that's what ASIC will. I guess that's what they will display, or that's their headline. But I think we've got over 600 on Swyftx alone. Some other providers have over 1 million. So it's there can be a lot of obviously duplicate accounts, which we're aware of. But it's interesting to see those numbers. And obviously we've seen a massive increase, especially over the last 2 years. Even in a market like we're in now, many people are still dipping their toe for the first time in the industry. So I think that total addressable market just continues to grow in Australia, which now you guys are here as well, so there's a reason for that too. So
yeah, for sure. And one of the things I'm seeing is just actually investing in crypto is becoming easier and easier. And having great UI from a lot of exchanges, and just the way people can trade now, it's just at the click of a button on their sofa with the app open on their mobile phone. It's just become so easy for people to hold. There's lots of wallet options available. I think that's probably contributing to the rise as well. Just a few other kind of numbers out there. So it's generally the kind of younger generation that are really embracing crypto and the technology associated with it. So 1 in 4 crypto owners are estimated to be aged between 18 and 34. One interesting stat that I picked up from Chainalysis as well was that Australia is actually in the top 20 countries of highest crypto gains as an estimate. And that sits at just under 3 billion. And that, I mean, it might be hard to imagine now when we see how much the market's crashed. But just something to bear in mind that Australia actually has massive crypto adoption compared to other countries globally as well.
For sure, it's really interesting to see how the Australians have embraced digital assets and cryptocurrency as a whole. I remember I was working for a company called Resdi in like 2013 or 14. And we had to download this little file on our company laptops, and we were mining Bitcoins from our laptops from the back of this hotel while we were doing a startup. And we thought it was going to be something small that maybe would grow over time at like a slower rate. Never when I got into it at that time, when I think we got our first ones at like $14. And like now to see where it's been wild.
Yeah, well, there you go. And it's not just people as well that are embracing the technology in crypto. It's institutions. I've got a few examples on the slide there. Tesla, KPMG in Canada, and also the endowment funds of Harvard University. But we're also seeing sovereign adoption. So El Salvador is the flag there at the bottom. And I think that actually has caused some confusion from an Australian tax perspective as to how crypto is taxed. And we'll try and cover that a little bit later on. So the pressure around crypto is kind of mounting from authorities and tax authorities as well, not just in Australia, but globally. And exchanges are required, to undertake kind of AUSTRAC compliance, AML, anti-money laundering, KYC. Tommy, I know Swyftx are probably all over that, but something to acknowledge that I think the regulation does show that the industry is being legitimized, and I think over time we'll just see this more and more.
Yeah, I agree. I mean, at the end of the day, it is a self-regulated industry at this time, but we're shouting from the rooftops with Senate committee submissions, and we're going through as an exchange, and I think some of our peers as well, we are kind of pulling together in the right direction for those the correct fit for purpose regulation for the industry long term.
For sure. And I think even what we're seeing at the moment with like prices dropping and people say a crash or crypto, like that's not actually going to take the foot off the gas with regulation. If anything, it's going to help facilitate that. And regulation isn't always a scary thing in industries. If anything, it legitimizes the industry and allows people like us that want to build on the technology and provide software and technology for the consumers out there to start working within a safe framework, which I think is just an ideal win for everyone.
Yeah, absolutely. I definitely tend to agree. And regulation incoming, I suppose.
Yeah, I think it's definitely on the horizon. Depending on what happens, I guess. We obviously seen the election come up. The Liberals had a pretty strategic plan to integrate kind of regulations pretty quickly, but I guess it remains to be seen what's going to happen with the new policymakers in house now.
Yeah, of course, we had the Bragg report that was released under the Liberal government.
That's
so
right.
It does remain to be seen, but I think hopefully regulation in the crypto space will be at forefront, and we will see some change.
Interesting to an event that Russia just completely banned it to try and protect their ruble today.
Yeah, wow.
Yeah, I saw that on the way in.
Right.
So for you users, I just want to highlight that the ATO have actually called out that crypto gains are one of 4 priority areas for them this tax time. And the ATO came out very early, before 30th of June, and said, everyone holding crypto must report their capital gains appropriately. It's also important to highlight that one of the second focus areas was record keeping, and we'll touch on that a little bit later, because of course it's not just what you disclose on your tax return, but actually the records you keep to back that up is really important. And just below there is a screenshot that I actually took from the ATO website when I went to look at my tax return a couple of weekends ago. And it turns out the ATO already knew I had held crypto in the year, and that was the message that came up saying, hey, you have crypto, please report your gains. So
Danny, as the head of tax at Koinly in Australia, I'm pretty sure that they would have a look and see if you had cryptocurrency and if you had reported it correctly.
Exactly. So there you go. So let's just
Occupational hazard.
Occupational hazard, yeah, for sure.
So let's cover a little bit about the guidance from the ATO. This is just a little timeline here. I've picked out some key points when they've released guidance or commented. So very early on in 2014 is actually when the ATO first started talking about cryptocurrency and providing guidance. And we saw these things called tax determinations come out. One of the first ones was the ATO basically making the statement that Bitcoin is not a foreign currency. From a tax perspective, that's quite relevant because it would mean you're not treated on capital gains, but on income account. And obviously the adoption from El Salvador has kind of confused that a little bit, to the extent that Treasury actually came out again before 30th of June and clarified that position to say, hey, crypto is still not seen as foreign currency; it's a CGT asset. Guidance started getting released in 2018. In 2019, the ATO started collecting information to make sure that what's being reported on your tax return actually matches up with the data they receive. And we'll see at the end of 2022, a review hopefully completed, or at least in consultation from the Board of Taxation. And that report is due to government at the end of 2022. So
Danny, just for those on the that are listening in that may not know what a CGT is, I know it's on the following slide, but with the acronym, it's...
Yeah, so CGT stands for capital gains tax. We'll cover that in a few slides. Before we do, though, let's just debunk some common myths. So I think we've fully debunked the first one, which is that crypto is taxable. It's amazing how many people still think crypto can be used and to kind of hide taxes, or, if it's just out there in the ether, I don't need to worry about it, out of sight, out of mind. That's definitely not the case. So I just want to make it clear, first and foremost, if you hold crypto, it's very likely you will have some tax obligations. Go see an accountant that knows crypto, and just very much, very important, I think, to bear in
Anything
mind.
is the worst place to try and hide from taxes, being on a blockchain, right?
Yeah, exactly. Everything's traceable.
Yeah.
And that's again why it amazes me. Blockchains are inherently traceable, immutable. You can't change their records once they're on the blockchain. Definitely not a place to hide. The other one just worth highlighting now is that transacting crypto to crypto is a taxable event. And we'll cover that a little bit more, but just something to bear in mind as we go through this.
example of that would be?
So an example would be just Bitcoin to Ethereum,
Right,
or
yeah.
even Bitcoin to a stable coin like USDC.
We were talking about this before. We thought we'd mention it on the call, which is if you were to take AUD and convert it to Bitcoin, then convert that to like another layer or a smart chain, and then go buy an altcoin, that's actually creating a taxable event at every instance of that. And if you think that, when the times when I was buying altcoins, I'd be transacting so quickly, I'd be racking up like 10 to 20 taxable events in maybe a handful of trades.
Yeah, exactly right. And that's something a lot of people don't realize even today. So it's one of the things we're trying to really make it clear. So the other one I want to mention is just as an ordinary investor, which most people will be that are watching this webinar, you can't use capital losses against your salary and wages, so income from salary and wages. So you can't offset those losses against the income. That's something that generally people think they can do. And if it's treated as a capital gain, you can't. And we'll cover capital gains a little bit later. There's also another one out there, which is something called a personal use asset rule. I've seen some conflicting messages on this, where if you go and spend crypto and it's under $10,000, it's tax-free. That's really not the case. The ATO have come out and actually said, it's really rare for the personal use asset rule to apply. So just bear that in mind. If anyone's seen that out there, definitely check that up with an accountant, because it's a common one that I've seen a lot.
Danny, I have an additional one for you that I wanted to add on there. So the story of, I was in an Uber going home, and I was speaking to the Uber driver who told me that his kids have been trading NFTs on Discord with people at school, making a bunch of money. And he was like, I don't have to give him pocket money anymore. And I was like, well, how's he handling the tax? And he was like, well, he doesn't have to pay tax because he's under 18. But I think that's a common misconception, right? Because once you're working age.
Yeah, and also what's happening, I think NFTs is a really good example, Adam. But the one that I think is particularly interesting is GameFi, because people are, young kids potentially playing these games, earning income from them, and potentially have a situation where parents are having to worry about their kids' taxable events that are coming from these games they're playing. So yeah, definitely one to watch out for.
I love the thought and the innovation around it. Like, I think it's amazing that we are blockchain and gaming and crypto assets are getting to a stage where we can actually, this is a problem we have to solve now, right?
Right.
Like, it's like, I think that innovation is something that shouldn't be stifled, but obviously this element of it needs to be handled correctly.
I mean, it's like the kids who used to go and buy like all the apps on their parents' iPads, and then their parents get the bill. There's nothing worse than thinking that your kid's making all this money and then suddenly realizing he's not saving the taxable amount of it.
Spoken from experience there.
No.
So first and foremost, before you actually think about how you're taxed, it's just really important to actually understand whether you are being essentially running a company, or you're a trader, or you're an ordinary investor. And so most people listening will be an ordinary investor. Perhaps they have their main income that doesn't get derived from crypto assets. And so it's just something to note that first and foremost, before you understand which tax treatment applies, you have to kind of look at how you're trading, and whether it's as an investor, which is most likely for people that are trading casually, maybe even as a hobby. When I first started getting into crypto, I was using it for educational purposes. I was trying to understand how to get a wallet. I had no concept of how to picture a digital wallet. So I just went and did it, and that was one of the first transactions I did into that wallet, just to kind of work out, well, what is this? What does it look like? So for traders, it's often kind of carrying on a business in the crypto space. It can be mining, for example. The ATO will consider things like, the nature of the activities. Are you intending to make profit? The repetition of those activities. Do you have a strategy in place, like a business plan, for example? And if you are a trader, you won't be treated on capital gains account. It'll be treated as trading stock rules being applicable. And we have an example to show later on, but it's just something to bear in mind. The other thing I'd say is a lot of people think that if they trade high volumes of crypto, they can suddenly be treated as a trader or a business. And I think it's just not the case in crypto, because oftentimes we see people are just trading a lot because it's so easy to transact and create all these taxable events. But it's not the be all and end all and the determining factor. So
there isn't like a magic number that you hit.
Exactly.
Yeah,
There's not a
exactly. I
magic
think
number.
I think a lot of people do think that. So I think it's important to highlight there isn't like a magic number you hit that automatically switch you into,
Business. Yeah.
business.
Absolutely.
Yeah, that's right.
Absolutely. So here we go. This is just a very basic, what is capital gains? And essentially it's a difference in value between what you bought your crypto from and what you sold it for. And the result will either be a gain or a loss. There's a lot of different types of disposal events, what we call in the tax world, that will trigger either this gain or loss. And so the way it's calculated is your cost basis, which is your purchase price, plus any associated fees. They're using Swyftx, probably not many fees there. And the disposal, less the disposal value, what they sold it for, and that'll give you either a gain or a loss. A couple of things about CGT. If you hold a particular CGT asset for more than 12 months, you may be eligible for a 50% discount. So you can get a bit of a tax saving there.
Discounts in tax, eh?
Exactly.
I like the sound of it.
The other one is, and this is probably very relevant from the market perspective at the moment, is capital losses can be used to offset against capital gains. If you haven't made any capital gains in this year, it can be carried forward to future years if you keep the records of it, but you have to record it on your tax return.
That's an interesting one to talk about there, because a lot of people that I've been speaking to who before may have been more apprehensive towards doing crypto tax, this year are really embracing doing it because of what happened with Luna and the losses that they saw there. Because especially if the market's down at the moment and you were part of that that situation with Luna where the price really disappeared and so did the blockchain, then now's the time to kind of declare those losses so that when the market bounces back to the level that we all expect it will, then we'll be able to see those gains be realized and offset against the losses this year.
Yeah, exactly. A lot of Luna holders are wondering, what can I do in this position? And I suppose that does give a silver lining in some respects. It's probably still not going to heal the wounds, I'm sure, but just something to be aware of.
I think you're alluding to the fact that very thoughtful of them to make this play out before the tax get put off.
Yeah. Interesting timing.
It's tax loss harvesting, right?
Exactly. So just some examples of taxable events for investors. So we will, when I talk through these next slides, kind of focus very much from an investor perspective. And therefore, when we talk about these taxable events, we are essentially saying, well, when do I trigger a capital gain or a capital loss, essentially? So I think we covered a lot of this. So when you sell crypto or gift crypto, so if I was to feel generous, Adam, gift you a bit of Bitcoin or 1 Bitcoin, then I would be creating a taxable event. But also, again, we covered this earlier, but when you trade or exchange crypto for crypto, and often you can do that just on exchanges very, very easily.
Swaps and things like that. Yeah.
Swaps. It's often a click of a button. It's much easier than, when you have stocks and shares and you sell the shares, invest the proceeds. So I think it's just something to be aware of. You are likely creating those taxable events when you're exchanging. The obvious one as well there is when you're converting crypto to fiat currency like Australian dollars, for example. That is a taxable event. But the other one we're seeing more is these kind of crypto debit card like things that you can go and spend your crypto account for goods and services. You can go and buy your coffee and just tap away on the machine and just think, yep, I'm sweet. I've made a bunch of money with my crypto. But each time you are using your card in that respect, you're likely creating that taxable event. And just a note there that, if you do fail to declare any gains associated with crypto, the penalties are high. Definitely be transparent and open when you are giving information to your accountant. So very important there. The other thing I want to mention is investors can still be treated as being taxable on income, even though they have this capital gains tax concept applied. And so that generally applies to when you're earning staking-like rewards. And there's a lot of platforms out there that allow you to earn from staking, essentially. I know there's Swyftx Earn, Tommy.
Yeah, exactly. So it's, I guess just highlighting that any assets you're earning on within the Swyftx Earn program will essentially go into the other bucket, which is the income tax bracket.
Exactly. And again, and we'll cover this a bit later, but it's important to really be able to track when you're creating these taxable kind of events through income versus capital gains. The other thing about staking to note is you have to effectively pay income tax when you receive that staking reward. But then if you go and sell that asset, 6 months down the line, that's then a CGT disposal. It's basically disposing of a capital gains asset.
And for those that are following on the link, I've just been pinged from the team outside. They're reviewing questions as they come through, and they'll flick them through to my computer here. So if there are questions or things that you want to chime in with, then feel free to leave those in the YouTube comments, because they will get to us here in the studio.
Yeah, definitely. Absolutely. And the other one I want to cover is airdrops. So this is an interesting one because often you can have a wallet that you might have forgotten about, and the way airdrops work are they're generally used from a marketing or promotional stance. So you often just have something of value dropped into your wallet, whether you've asked for it or not. And the ATO essentially say, well, that's taxable as income at the market value that you received it.
Good example there would be anyone that held Bored Ape Yacht Club NFT got airdropped the ape token into the Ethereum wallet that they're holding that on. So that's
anyone lucky enough to
lucky enough to hold one. That's right.
And there's also some more kind of novel interactions as well. Like there's this app called Steppen, which allows you to earn whilst exercising, essentially. So as you're stepping along, you can earn some crypto. But the chances are, if you are doing that, you also may need to consider your tax obligation from an income perspective.
We've had a question particularly in relating to nodes and the taxation on them. So I think what I'll do is I'll put some information at the end of this to circle back on how like strong block nodes are taxed.
Yeah, and I think as well, particularly with nodes and all these kind of questions there, is it comes back to are you intending to run a business? Are you running in a business-like manner, or are you using it as a hobby? Are you using it to learn from? And just kind of understanding those intentions first before you understand the tax is going to be really important, because it'll impact kind of how you are taxed when it comes to it. And finally, DeFi, a lot of people are borrowing, lending crypto. There's a lot of DeFi protocols out there. Chances are, if you're lending, you'll receive an interest-like reward, which is then taxable as income. Just something to note there as well, DeFi is definitely within the scope of the ATO. And we're seeing more and more of it at Koinly as well. So it's just an example of capital gains tax, and this is going to be relevant once the slides are up on YouTube as well after this live event. So Liam purchases a Bitcoin in January 22 for $1,000. They've paid a fee of $100. Tommy, that's way too high.
Yeah, it's a pretty hectic fee. Probably should have traded on Swyftx.
Exactly. In May 22, he exchanges that one Bitcoin for 2 ETH. And the value of that Bitcoin at the time is 4,000. And he's paid $100 of brokerage fees on the sale. And so essentially the new coin value being 4,000 needs to be deducted from the cost base, 1,100. You can add that new fee on as well. So you're left with a capital gain of $2,800. Just a very simple example.
We have a question, which I think is an interesting one to kind of put on here, that someone said that is there much difference for them if they were to do like one large transaction a month as opposed to multiple, or is it more of the accumulation of that?
Well, the timing will be relevant because you have to take the purchase date, so when you've bought that crypto, and the sale date, and essentially understand based on those two dates, have you got a gain or a loss, and what is that gain or loss? So doing that multiple times will generate these kind of multiple instances of capital gains or loss. If you're doing just one large transaction, potentially you just have one gain or loss event.
And so another interesting one is, does the ATO want to know, and I know we'll get to a Q&A section, but this one's relevant here. Do they want to know just your total buy and sell, or do they need to know every line item?
Yeah, so I think the more you can record, the better. So it's not just about your buy and sell, and this kind of depends what you want to disclose or claim on a tax return. For example, if you're claiming a loss because you've had your crypto stolen, you'll need to show a lot more than just that you've bought and sold, or just bought that crypto. Perhaps it's been stolen. So it's more about what the fees associated with it are, because it has to be added onto the cost base, etc. The dates are really important as well. The market value in AUD at the time that you bought, the time you sold. Working out that market value is really important as well, especially when there's some obscure cryptos that are out there that people might be trading with. So yeah, very important.
I mean, the Celsius filing for Chapter 11 is going to be an interesting one on how people are reporting that. That's a question that's coming through quite a lot.
Yeah, I think that's a good one. I mean, it's probably still too early to say, because it's definitely an evolving situation. But potentially, if those people can't get their funds out of the protocol, then it's something that can be considered from a capital loss perspective. But again, I think it's too early at this stage.
It's probably not for this tax year.
Yeah,
no, definitely. But it's definitely one to watch what's happening.
I think people will be hoping it's something that comes into scope for the next tax year.
Yeah. Exactly.
Look at what's happening with the likes of the Mt. Gox hack and all the Bitcoin that were locked up there. Hopefully it doesn't take 8 years for this scenario to play out like it did there.
Yeah, exactly.
Danny, I'm going to have to give you a little time check as well.
So just some things to watch out for. So there's something called a wash sale rule, which is essentially where you buy the asset, sell it very quickly just to create a capital loss. That's something that will likely end up you not being able to claim a capital loss to offset against any gains. The ATO came out before tax at the start of the tax year and kind of said, well, wash sale rules apply to crypto. Don't wash sale. I covered this earlier, but personal use assets under 10K. This is one that people think they can use very, very freely and just spend crypto under 10K. But it's very rare this will apply. The ATO have given an example on their website, and it's basically saying that if you want to go to a concert and you have a discount to buy the ticket if you pay through crypto, so you buy some crypto and then buy the ticket in a very short space of time, like 10 minutes, then potentially it's a personal use asset. But any significant length of time that you hold that for, the more likely it'll be treated as an investment. Chain splits and forks. So that's something we see quite a lot. The ATO basically say that there's no income tax when you receive the new fork, essentially. But the cost basis when you do is zero. And so you have to calculate your capital gain or loss on that disposal. It's likely to give me a capital gain if the cost basis is zero. So it's not an ideal outcome for the investor, but just something to be aware of there. Wrapped tokens as well. And, without trying to get into too much detail here, often you do have to have your tokens wrapped, like on the Ethereum blockchain. Wrapped ETH allows you to interact on other networks and engage in smart contracts and the like. Those token transfers from ETH to wrapped ETH are taxable events. Whether they should be or not, I think is going to be a discussion that's had. Personally, I find I do struggle to understand whether there is what we call in the tax world a change in beneficial ownership. But nevertheless, that's how it is now. That's the ATO's guidance. So something to be aware of. And again, I mentioned earlier, but there are transactions that are subject to income tax, even though you hold them on capital gains account. So staking, be very careful when you do stake. That should be declared as income. And I know there's probably a lot of customers using Swyftx Earn that don't need to consider that.
we do provide that daily line item per asset that you're earning on. So again, the Koinly software should be able to pull that out and calculate the P&L and what the requirements are for people to be able to go to their accountant after that and report correctly.
Yeah, right. And without getting too technical, there are protocols like the new Ethereum network that's coming out is where you can stake your Ethereum 2.0 essentially, but not actually access it until sharding comes through.
That's right.
Should that be taxed as income even though you can't receive it? That's a very philosophical question that we don't need to get into, but something to be aware of, that these considerations haven't yet been hashed out. So it's worth seeing an accountant.
We've been waiting a while for the sharding, so I'm looking forward to it.
Yeah, absolutely. I think there's a date announced for the merge. So
There is, yeah, mid-September.
yes, we're looking forward to that. So for those that have been unfortunate and had their crypto lost or stolen, there is a silver lining. So you might be able to claim a capital loss. If you've lost your private keys, for example, you've thrown your Trezor hard wallet away and you don't have the secret backups and you've lost those. The downside of this, or the catch, is you really need the evidence to show you have genuinely lost it. A loss has to be an asset that's lost. It's not just reduced in value. So just be very careful. Here's some of the examples of evidence that you need to provide. And I think my reaction or initial reaction to this was it's quite significant. The ATO really want you to prove you have owned the wallets and it's genuinely lost and you had access to the funds. Work with an accountant on this if you've lost a lot of crypto or had it stolen. So I just want to cover some top tips. So firstly, and this isn't a tax specific one, but really important to have good wallet hygiene. Have your different activities in different wallets. It's much easier when you talk to your accountant if you need to provide information to the ATO. Again, I mentioned it, but I'll mention it again. So if you hold your crypto asset for 12 months or more, you may be entitled to that 50% discount. It's quite significant. Definitely bear that in mind. Thirdly, record keeping. We'll touch on this later, but use software to track your crypto transactions. It's really hard to do on a spreadsheet. Fourthly, you can donate to save on crypto tax. So if you're donating to an organization that's on the registered list that the ATO have, you can claim that as a deduction. We mentioned loss harvesting. I'll mention again, record those losses that you've made during the year, because you can use them against future gains. And finally, use an accountant. This stuff is very complicated, especially if you're engaging in complex DeFi or GameFi interactions.
And I was actually going to jump on a point there around the accountants. So Koinly, we actually have a platform that's specifically for accountants as well. So it's a CPA platform. And what we also have is a directory on our homepage that actually indicates kind of who's using that, which accountants are crypto friendly. We were presenting in a large accounting firm recently, a nationwide one, and they literally said that you can't pay us enough money to do a crypto tax report that hasn't gone through Koinly, and they recommend it to their customers to go and use it and come to them. So we have a list on our website that just says, these are the accountants that are more than happy to work with crypto assets, which is great to see, because as more and more people adopt these assets, then the accountants that kind of shy away from those crypto tax reports, they start getting that diminishing user base. So it's really cool to see that being embraced by an industry like the accountants.
Works for everybody, right? Works for the individual, works for the accountant. They don't lose business. They get to keep. I went through a similar situation myself with one of my accountants in Melbourne, where they just did not want to touch the crypto side of it. So that's from my own experience. These software has now been available in that direct to the accountants. Is it's a great solution to have.
Definitely. And I'll gloss over this very quickly, but it's just an example. If you are running a business or carrying on a trade, you'll be treated under trading stock rules. There's an example here that essentially if you have bought crypto and you're trading a business, so basically if you have in December 21, buy 100 ETH for 250K, and on the same day the trader sells for 300K, the 250K can be used as a deduction or claimed as a deduction because it's purchase cost, and the 300K that it's sold for is essentially sales proceeds or income. So how can you use software to help comply with these obligations that you have? So firstly, I think it's really important to note that don't use an Excel spreadsheet, particularly if you're trading a lot. It's really, really complicated. The ATO require a lot of records, so capital gains, losses, the income you've earned from staking. You should ideally keep records for 5 years from the point at which you file your tax return. And so there's examples there on what you actually need to keep. And because of the amount of data points you require, it's really hard to do yourself or manually on a spreadsheet, particularly in the volume people are transacting in the crypto space. So software like Koinly, that's really where it comes in, because Koinly can plug into your wallets, blockchains, and exchanges like Swyftx directly, and pull through the information into Koinly through API, which is essentially like a connector into Swyftx. It's all read only, so Koinly can't trade on your behalf or anything like that. It can just pull your transactions through. We often see users in Koinly have multiple different wallets, so it's not just one exchange that they'll be connected to, but it'll be different wallets or DeFi protocols that they're engaged with. So having everything in one place is really important. There's also a lack of clear guidance. We've covered the basics today, but there's a lot of novel ways people are using crypto that hasn't yet been considered in guidance. There is a lack of crypto tax experts. That's just a fact. There's not many accountants out there that specialize in crypto tax. A lot of accountants don't understand crypto, the ways in which people are using crypto. And one thing I want to highlight is when you do work through the tax obligations and implications, it's really important to understand how people are trading crypto. How are they holding it? What are they intending to do? Is it a hobby? Are they carrying on a business? And so working with your accountant on that is really important, but I'd say work with an accountant that understands crypto.
Awesome, Danny. I really appreciate you going through that, because I'm sitting here at the moment and I'm getting the questions coming through. And there is so many questions coming through from people that have a really detailed understanding of kind of the topics that we're talking about today, that are going to such a granular level. And it's great to see the conversation coming up around crypto tax. As we said at the beginning, it's not the sexiest of subjects. And people are actually asking questions. Swyftx customers on there saying, if I move something from one wallet to another wallet, is that a taxable event? All of these detailed questions are coming through, and it's just great to see the interaction.
That's actually a good one, Adam. Let's pick up on that. So if you do transfer crypto from, let's say, your Swyftx account to a wallet like a Trezor or hard wallet, that transaction itself is not taxable because you still hold the crypto, but you may incur fees or transaction fees that actually mean that you sell a portion of your crypto to pay for those fees. And so it's really important to remember that whilst it's not a taxable event, your crypto, your disposal that you're using to pay for that fee is going to be taxable.
Yeah, I think that's something we don't have 100% of a solution for just yet. That does blockchain fees that are integrated. But yeah, very, very keen for you to highlight that area as
and
well.
Of course Koinly tracks that, right? So you might move between different wallets. They might be all your own wallets. You can mark that as, hey, Koinly, I've transferred that to myself. Don't panic, I'm not making huge capital gains. So you can flick that switch in Koinly, that you can review it individually, and that's
awesome. Such a handy tool to have, and I think it's an absolute necessary these days for people that are interacting with cryptos to have some kind of a tax software solution. And you guys doing a great job there. I've got a couple of questions that came through on the live stream, which I'd love to run through. These are actually some I've seen come up across our customer support on Swyftx as well.
Yeah,
so
sure.
One of them is, why might I still need an accountant to do crypto tax if Koinly exists?
Yeah, good one. So I think it's really important to actually work with accountants, even though you have software like Koinly. The reason being is it's likely that crypto isn't the only investment you hold. You might have shares, you might have rental properties, you might have savings that you're kind of managing from a tax perspective. And so the accountant will do the strategy around that. And if you have losses, for example, in crypto, you can potentially offset that against non-crypto assets as long as they fall under a CGT asset. And so it's important to not just take what Koinly says as the source of one truth, but just to kind of work with your accountant to work out, are you getting all your allowances and reliefs that are available to you? What's my strategy with the other investments, and work that through. And the other reason is because there are a lot of complex interactions. We've covered this during the presentation. Yeah, lots of different ways people are trading crypto that's far ahead of the guidance that's come out. There's organizations called DAOs, decentralized autonomous organizations, that operate, and lots of people becoming members of DAOs or holding governance tokens. And what does that mean from a tax perspective? And these are all really interesting debates to have, but it's not something that's definitive in terms of guidance, and that's why working with a really strong accountant, if you are into those spaces, will be really important.
The way I always frame it for friends, and you can tell me if I'm wrong or not here, guys, but I always frame it as Koinly will give you 90% of what you're supposed to report, and then that last 10% is up to you and your accountant to actually work out what your potentially your proper reporting is to be. So the alternative to that, like I mentioned at the start of the call, is you having an Excel spreadsheet or just your CSV file from your exchange, giving that to your accountant. You're starting at 0%. And then your accountant's going to charge you for every single one of those line item transactions, which I said, I think I paid $1,000 just to get my CSV reviewed a few years back. That's where you're starting. So, you're starting on 90% versus 0 if you're trying to just go yourself dry without any solution.
Exactly. And you can go into Koinly and actually allocate what the transactions are to make sure that they're properly identified. It just makes life easier for everyone. I mean, even as we're sitting here, I'm getting the comments come through, and actually a couple of people on the stream have actually taken the free code, gone and signed up and done their taxes while we're here doing the presentation. Someone's just called out that they connected 2 wallets. It was that easy. They've done it while listening to us.
Perfect. We got a few more coming through there. Can Koinly be used to track NFTs and DeFi transactions?
Yes, absolutely. So you can link up your MetaMask wallets. Decentralized wallets are supported with Koinly. There's so many integrations, and that's one of the things we really focus on, is having the strongest APIs and integrations with various different exchanges, wallets, blockchains. So yes, definitely.
Do I pay tax when providing liquidity to liquidity pool? Very popular one, I'm sure.
Yeah, this is a good one. So currently the way the ATO see this is when you do provide liquidity to a liquidity pool, you're making a taxable disposal or a capital disposal. And you're acquiring a new token, being the LP token. And so, yes, that is a taxable event. Whether it should be a taxable event in all circumstances, again, it's up for debate. I think this is also a really interesting one because there's a lot of arguments you can make as to, you still have ownership of that token, or you can reverse the transaction and get it back. So, yeah, but just note that yes, it is a taxable event as it stands, or that's the ATO's interpretation.
There's probably a follow-up session we could do later on to get into the nitty-gritty of everything else.
People are actually asking that, will there be more sessions, and will this be recorded for me to go through? So yeah, it will be recorded. It'll be available. I see a lot of comments coming through here that we haven't had time to address today. What I'll do is I'll work with the Koinly team to get some responses together for them so that everyone kind of gets their voice heard and their questions. But I want to just take a minute to thank the people that are listening on the call. Swyftx for joining us today, Tommy for joining us, and for letting us share this information with your customers. It's great to just sit here and see all the comments flying in because people are really engaged into the content. And thanks for Danny for making the trip up here with us to Brisbane, and the team outside that's been supporting us. It's great. I had a really great podcast, and really look forward to.
I think some of the work gone in behind the scenes to pull this all together has been fantastic. So yeah, massive appreciation to the teams on both sides there.
Awesome, and thanks so much for being here today. It's been awesome, and for those on the stream, as I said, it's been a pleasure. We'll wrap up for now and look at the comments and feedback.
Yep. Perfect. Thanks guys.
Very much.
Great to chat.
Awesome. Thanks so much.
Cheers.
Done.